Hey everyone, welcome in. We're diving deep today into a topic that I know a lot of you have been curious about, gold IRAs.
Yeah, it seems like they've been getting more attention lately.
Definitely, and that makes sense, right? I mean, for a lot of folks, gold has this almost mythical quality to it. It's tangible, it's historic, it just feels different from stocks or
Yeah.
bonds.
It's interesting, isn't it, how gold holds that kind of appeal. And I think that's part of what draws people to the idea of a gold IRA, this sense that they're holding something real, something that stood the test of time.
Absolutely. And that's exactly what we're going to unpack today. We've got a ton of great material articles, research reports, all sorts of stuff, and we're going to break it all down for you. The goal is to help you understand not just the potential benefits of Gold IRA, but more importantly, the risks that you really need to be aware of.
Yeah, I think that's key. Because, like any investment, there's more to the story than just the initial appeal. We're talking about things like the stability of gold prices, the fees involved, the tax implications.
Right, exactly. So let's start with the basics. What is it about a Gold IRA that makes it attractive to investors in the first place? What are those core selling points that really draw people in?
Well, I think a lot of times it boils down to three main things. First, you've got diversification. Now, this isn't just about having different stocks in your portfolio. It's about holding assets that don't necessarily move in the same direction.
Right, so not putting all your eggs in one basket, as the saying goes.
Exactly. And gold, historically, has often shown a tendency to do the opposite of what the stock market does. Like back during the 2008 financial crisis, when so many stock values were plummeting, gold actually held pretty steady and even increased in value for a while. So it's kind of like a counterbalance, potentially.
Okay, so it's about creating a bit of a buffer, a hedge against those big market swings.
That's the idea. Then the second big selling point that you hear a lot about is inflation protection.
Right, this idea that gold is a good hedge against inflation, a way to try and preserve your purchasing power when everything else seems to be getting more expensive. Exactly. The classic argument is that as the value of paper money declines, the value of a tangible asset like gold tends to go up. Of course, it's important to remember that this relationship isn't always perfect, but the core idea is that gold holds its value over the long haul.
And then, of course, there's that third element of appeal, that sense of security that comes from owning something physical, something you can actually touch and hold.
That's a big one for a lot of people. It's different, right? It's not just numbers on a screen or a piece of paper. It's a tangible asset. And that can be really comforting for some investors, especially during times of economic uncertainty.
Okay, so we've got diversification, inflation protection, and tangibility. Those are some pretty compelling reasons to at least consider a gold IRA. But like you said earlier, there's more to the story, right? Let's talk about the potential downsides. One of the first things that jumps out from the research we've been looking at is the volatility of gold prices. Even with this image of stability, the price of gold can actually fluctuate quite a bit, can't it? Yeah, it can definitely move around. It's important to remember that gold is still a commodity. It's traded on global markets, and those markets are influenced by all sorts of factors. We tend to think of gold as this safe haven, and it can be, but it's not immune to ups and downs.
Can you give some examples of those ups and downs, some concrete moments in history that illustrate this point?
Sure. We were just talking about the 2008 financial crisis when gold prices did really well. But if you go back to the early 1980s, gold had this big run-up in price, and then it crashed pretty hard.
Hmm.
So it's not always a straight lineup. It can be unpredictable.
So what are some of the things that drive those price swings? What are those all sorts of factors that you mentioned?
One of the biggest ones is global economic stability. When economies around the world are doing well, there's less of a need for safe haven assets like gold. So demand goes down and prices tend to follow. But when things start to get shaky, like during a recession or a pandemic, like the COVID-19 pandemic, gold tends to look more attractive, and that can push prices up.
Makes sense. So economic uncertainty can be good for gold.
Yeah, to a certain extent. But it's not just about the overall economy. Central bank policies play a huge role, too. When central banks, like the Federal Reserve in the U.S., decide to increase their gold reserves, their purchases can really move the market. Same thing if they decide to sell. So keeping an eye on what central banks are doing is something to consider.
That's an interesting point, something I hadn't really thought about before. What else should investors be aware of?
Well, geopolitical events can also have a big impact. Things like wars, political instability, major trade disputes, those kinds of things can all create uncertainty and make investors nervous. And when investors get nervous, they often turn to gold as a safe haven, and that can drive up prices.
So if you're thinking about investing in a gold IRA, it's not just about the price of gold on any given day. It's about understanding these bigger economic and geopolitical forces that can influence those prices over time.
Absolutely. It's about taking a long-term view and recognizing that there will be fluctuations.
Okay, so let's say you've weighed all those factors and you're still thinking about a gold IRA. What else do you need to be aware of? Let's talk about the costs involved. I know this is a big one for a lot of people.
It is. And it's important to understand that the costs of a gold IRA go beyond just the price of gold itself. There are other expenses to consider. For example, storage fees.
Right, because you can't just keep the gold at home under your mattress, can you?
Not if you want your gold IRA to maintain its tax advantage status. The IRS has strict rules about this. The gold has to be stored in an approved depository, and those depositories charge fees for their services. You're looking at anywhere from, say, $50 to $300 per year, depending on how much gold you're storing.
Okay, so that's one cost. What else?
Then there's insurance.
Yeah.
You've got this valuable asset, you want to protect it. Insurance costs can vary, but you're probably looking at something like 0.5% to 1% of the total value of your gold each year. So if you've got $100,000 worth of gold, that could be $500 to $1,000 in insurance premiums annually.
And I'm guessing there are management fees too, right? Someone has to administer this account.
Right. You'll have management and administrative fees to cover the costs of maintaining your account, all the paperwork, that sort of thing. Those fees can range from, I'd say, $75 to $300 per year, again, depending on the company you're working with.
Okay, so we've got storage fees, insurance, management fees, all things to factor in. Are there any other potential costs that people should be aware of?
There can be. Some companies might charge additional fees for specific things like wire transfers, account setup, or even closing the account down the road. It's really important to read the fine print and make sure you understand all the fees involved before you sign on the dotted line.
Okay, good advice. Now let's talk about taxes. I know this can be a little confusing with IRAs in general, so let's try to break it down for gold IRAs specifically. What are the tax advantages and what are some of the things that people need to be careful about?
One of the main advantages of Gold IRA, from a tax perspective, is that it's tax deferred. This means that any profits or gains your gold investments generate inside the IRA aren't taxed until you withdraw the money in retirement.
Okay, so it's kind of like a traditional IRA or a 401k in that sense.
Exactly. You're not paying taxes on those gains year after year. It's all deferred until later. And that can potentially allow your investment to grow more quickly because you're not losing a chunk of it to taxes along the way. But here's the catch. When you do eventually withdraw that money in retirement, it's taxed as ordinary income. So the tax isn't avoided. It's just delayed.
Okay, got it. So what about required minimum distributions? Those RMDs that you have to start taking from traditional IRAs and 401ks when you reach a certain age, do those apply to gold IRAs as well?
They do. Once you turn 73, you'll need to start taking those minimum distributions from your Gold IRA. And if you don't, there can be pretty hefty penalties. So it's important to be aware of that and factor it into your retirement planning.
And what about those penalties? Can you give us an idea of what we're talking about here?
Sure. If you withdraw money from your Gold IRA before you reach the age of 59 and a half, you're usually going to get hit with a 10% penalty on top of your regular income tax rate. And with those required minimum distributions, if you don't take out the required amount after age 73, you could be looking at a penalty of 25% on the amount you should have withdrawn. So it's not something to mess around with.
Definitely not. Now, one of the other potential risks that came up in our research is the idea of leveraging investments, essentially, borrowing money to invest in gold. Can you explain how that works and what the potential downsides are?
Sure. Leveraging in the context of a Gold IRA basically means using borrowed funds to buy more gold than you could with just your own cash. The idea is that if the price of gold goes up, your profits are magnified because you control a larger amount of gold. But of course, the opposite is also true. If the price of gold goes down, your losses are magnified. And either way, you still have to repay the loan. So it's a very risky strategy.
So you could end up owing more than the gold is worth if the market goes against you.
Absolutely. And that can be a really dangerous situation to be in, especially when you're talking about your retirement savings. It's definitely not a strategy for everyone, and it requires a lot of careful consideration and a really good understanding of the risks involved.
Absolutely. Okay, so let's talk about choosing the right company to work with a company that can help you set up and manage your gold IRA. What are some of the key factors that people should be looking for?
The most important thing is to find a company that's reputable and trustworthy. You're entrusting them with a significant amount of your money, so you want to make sure they have a solid track record and a good reputation. Look for online reviews, check with the Better Business Bureau, that sort of thing. You also want to make sure they use a reputable custodian to store your gold. The custodian is the company that actually holds the physical gold, so you want to make sure they're secure and reliable.
Right. And what about those fees we talked about earlier? How do those factor into the decision-making process?
You definitely want to shop around and compare fees from different companies. Make sure you get a clear, itemized list of all the fees they charge, storage fees, management fees, insurance, the whole 9 yards. And don't be afraid to ask questions. If something isn't clear, ask for clarification. A reputable company will be happy to explain everything to you.
Good advice. Anything else?
Yeah, customer service is important. You want a company that's responsive and helpful with people who can answer your questions and address any concerns you might have.
Okay, so we've talked about reputation, fees, customer service. What about the actual storage of the gold? How does that work?
As we mentioned earlier, you can't just keep the gold at home. It has to be stored in an approved depository, which is basically a secure vault designed for storing precious metals.
And these depositories, are they insured?
They should be. And you'll want to make sure that your Gold IRA includes insurance coverage for your gold as well, just in case. You want to be protected against theft, damage, natural disasters, all of that.
So it's really important to do your homework to understand all the ins and outs before you commit to a gold IRA.
Absolutely. It's not something to rush into.
Okay, so let's wrap things up with a few key takeaways. What are some of the most important things for our listeners to remember? What are the biggest potential risks?
I think the first thing to remember is that gold prices can be volatile. They can go up and they can go down. And if you're borrowing money to invest in gold, that volatility can really magnify your risks.
Right, so leverage can be a dangerous game.
It can be. Another key takeaway is that gold IRAs come with costs, storage fees, insurance, management fees. Those costs can eat into your returns, so it's important to factor them in. And then, of course, there are the tax implications. You need to understand how gold IRAs are taxed both before and after retirement to avoid any unpleasant surprises down the road.
And perhaps most importantly, you need to choose your gold IRA company and custodian very carefully. Do your research, make sure they're reputable, and make sure you understand all the fees involved.
Absolutely.
So, the bottom line is this. Gold IRAs can be a part of a diversified retirement portfolio, but they're not for everyone. You need to weigh the potential benefits against the potential risks and make an informed decision based on your individual circumstances and financial goals.
Well said.
So here's a final thought for our listeners as you continue your research on gold IRAs. What are the most important questions you need to ask yourself, given what we've discussed today, to determine whether a gold IRA is the right fit for your retirement plan? Thanks for joining us today, everyone.
Thanks for having me.